Hey, thanks for tuning in to The Average Joe. This is episode 4. Today I kind of want to talk about difficulty, why it's out there, what it means for profitability, and making some choices about buying equipment, what to pay for equipment, and what's going to happen in about 2 years. To start off, let's talk about difficulty. Difficulty is a factor that's built into solving the problems that hashing machines are running through to solve a block. And the idea behind difficulty is it's a throttling mechanism to try to make sure that blocks are solved right around 10 minutes. So every time a block's released, the difficulty that goes in there is set to such a way that the block should be solved within about 10 to 11 minutes. It's a function of hash power. The more hash power you have, over time the difficulties are going to increase because you're going to be able to solve those blocks quicker. And we've seen this because people are tracking this. So what I have on screen is actually a chart of our difficulty factors and how it's been increasing. And going back to last summer, the difficulty wasn't too bad. So if you had your hands on some 10, 11, 13 tera hashing machines, you were tooling through blocks no problem and probably making some decent profitability relative to the price of Bitcoin. And then when Bitcoin took off in the fall, we had more machines on the market and the difficulty went up a little bit, and you were still doing really, really well making Bitcoin. Now, what we're seeing is we basically, in a 5 to 6 month period, have doubled and pushing towards tripling our difficulty factor. And the reason for that is let's take a look at the hashing power that's available for Bitcoin. And it's trending at a growth rate, but we do have some surges in here. But from 6 months ago, we have effectively tripled the amount of hashing power that we have. So the more miners we're plugging into the network, regardless of their efficiency, the more the difficulty is increasing. So as we have older machines out there like the S5s and the S7s that are still pumping out 4 terahashes here, it adds to the pool. And even though they're not as efficient and not as profitable, they do attribute to increasing our difficulty for us. So people are complaining, hey, the difficulty is going up. I hate it when the difficulty goes up. Okay. There's a couple things that are going on in terms of profitability for Bitcoin. I didn't do any charts or anything, but basically it's all ratios. Difficulty is a depressing number that brings down your profitability. The value of Bitcoin is a number that increases the profitability that you have when mining. And then the other one that's a longer term adjustment, and I'll get into this again in the video, is the amount of Bitcoin rewarded in solving a block. And right now, I can't remember if we're at 12.5 or 12.25, but come 2020, that reward gets cut in half as well, which means we're going to be making exactly half as much as we are now with Bitcoin, going with the idea that difficulty doesn't increase and the value of Bitcoin doesn't increase. So if you can chart out that difficulty brings down how many coin we can earn per hour per day, and then chart the value of Bitcoin, whether it goes up or goes down, that determines your profitability factor. And then put in the long term, what's going to happen when the reward block cuts in half. So I won't worry too much about the 2 year thing, but let's just talk about the immediate. I was fortunate enough to purchase some Antminers last year and paid about $1,200 a unit for these things. So I'm sitting kind of pretty right now when it comes to profitability because I have lots of room in terms of my earnings. That right now, my payback on a Bitcoin on my miners were basically within 5 weeks. So I've already made my money back on my equipment. Now the problem is that the value of Bitcoin has come down. It's not at 20,000, 17,000. It's bouncing around between 12, 13 to 14,000 due to a lot of weird things going on with people getting in front of Bitcoin, trying to scam Bitcoin, playing around with altcoins. Government's banning Bitcoin today, but then not banning it tomorrow. So there's so much volatility in there, it's hard to really gauge the profitability. Hopefully this kind of stuff smooths out over the next 6 months and you can get an idea of what the value of Bitcoin is and its growth. So again, it's okay if difficulty increases, provided that the value of Bitcoin moves in lockstep with the difficulty increasing. So people who are bull on Bitcoin are predicting it to be worth $30,000 by the end of this year. Hooray, that's double in price. So if difficulty increases and we earn less Bitcoin, that's okay, provided that the value of the Bitcoin outstrips the losses that we're earning on a day-to-day basis. Because at the end of the day, we're cashing out, we're paying our electric in US dollars, we're not paying for it in Bitcoin. So as long as that value is there, which is really the profitability, so we can cash out and go pay for our bills and stuff like that, it's great. Now, if you pay $3,000 for your miner, you're looking at almost a 3-month payback to get that back, if the value of Bitcoin stays the same and difficulty doesn't increase. If you paid $5,000 and when you bought it, you were probably thinking, hey, I can get my payback in 5 months. Well, value of Bitcoin's gone down, the difficulty is increasing, and you're probably clearing about $800 a month on an S9 type miner, which means that your 5-month payback is probably extended out to 6 months. And keep in mind, 6 months is a long time in the crypto market. So as difficulty increases, you're going to see your 6 months will turn into 7 months. And it'll probably be about 8 months before you break even on a $5,000 miner. Now, this is important. So you've made your $5,000 back. That's great. These miners are generally designed to last for about 2 years. They don't run forever. They are running at high temperatures, they are running high speed, they're going to burn out, and as they burn out, you're going to get less hashing power, less efficiency, etc. So at some point, these things are just going to not be worth running if you can make it to the 2-year point, because you can't get more hash power out of them. So if difficulty increases, you're making less. And if they start losing chips, you got less hash power, so you're still making less money. So the deal is, be realistic, saying, at the end of 2 years, you're going to pony up another $5,000 at least, because there's going to be newer technology out, higher hashing rates, and we really don't have an idea of what the average price of these units are, because the manufacturers are scalping the prices too. I mean, again, a unit that I bought back in the summer at $1,200, Bitmain is saying, oh, you got to pay $2,500 for. You know what? It's the same equipment. The price of aluminum for the casing didn't go up. The knockoff Raspberry Pi controller units didn't go up. They're still $35 for the parts. The chips themselves did not go up in price. They should be going down in price for 2 reasons. 1, demand. 2, it's older technology. So to tell me something's worth twice as much in 6 months when there's been no technology changes, is this them trying to adjust profitability due to the demand? So anyways, coming back to it, you may be spending another $5,000, if not more, to buy another miner. So in a 2-year period, you might be earning Bitcoin, true pure profit Bitcoin, 8 months out of 24. So basically 1/3 of what you are earning is what you can really safely keep. The rest you're going to need for reinvestment purposes. And again, that goes for a few things. That is, if the price of Bitcoin keeps growing and outpaces difficulty. If not, you may say at the end of 2 years, I don't care, I don't want to do this anymore because it isn't worth a couple $100 a month. Maybe it is. That's your own personal choice. And again, keep in mind, I'm talking 2 years. And what's happening in 2 years? The block reward halves. So unless you're doubling your hash power, literally going from, let's say, 14 terahashes to 28, you're going to make half as much money 2 years from now. So it's going to get interesting what's going to happen. A few things that I see, because it's all about ratios, we're going to see the older equipment drop off. You're not going to see S5s and S7s on the network anymore. Some of these other units, the WhatsMiners or whatever, that are consuming tons of power but producing less hashes, are going to drop off. So that may help us in that we're reducing the amount of hashing power available on the network, but then again, we might be buying newer, faster units that compensates for it. So I'm curious to see how these ratios play out. But I just want to put a word of warning out there that unless Bitcoin starts growing in price, all of us within 2 years are going to be considering whether or not mining, as the average Joe having a couple of units in our garage and our basement, is going to be worth our time, money, and effort. So a couple things in there. Maybe we don't mine Bitcoin anymore. Flip over to Bitcoin Cash. I don't know. I've got very mixed results in my earnings on that. Maybe you look at mining other alternate currencies, Litecoin, anything that's running on a script type thing. And the guys who are running GPU rigs, I think that's where they're headed to as well. I don't know. I'm a little bit more into the Bitcoin ASIC miner market. But keep in mind, difficulty is okay to go up, provided that Bitcoin goes up. And you got to look at all these ratios, and you got to understand your profitability, and you got to understand your risks. So if you're coming in new and you're relatively new to this, I'd rather get this out to you sooner than later and have you learn it painfully, where you go, yeah, come August, it's like, yeah, I really haven't made any money. What's this going to be like? So, anyways, hope you enjoyed the video. Hope you got something out of it. I'll be releasing, new videos every few days where I can, as I see different topics and things to talk on. Please hit the subscribe button. Really love to see what I can do with this. I know my videos are a little rough and home and rustic, but this is new to me too, and I'll try to improve them as it goes on. But hopefully I'm providing you some good information and content. Talk to you guys later. Bye.